Amazon's market cap surpassed that of Walmart's a long time ago, but only now have Amazon's sales overall surpassed that of Walmart.
Really, over the past few years, we've moved away from comparing Walmart to Target, and we've moved toward comparing Walmart to Amazon. And this is just another example. So many on both Main Street and Wall Street discussing this crossover this morning, with Amazon surpassing $717 billion in sales in 2025, whereas Walmart posted annual sales of $713.2 billion for 2025. And it goes to show that this is a larger comparison that we're making as Walmart really looks to double down not only on how exactly they're engaging with consumers and doubling down on delivery, but also how they really are looking to be more seen as a tech company moving forward.
The bigger story here is also this transformation of AI meets retail. So what we see happening is the world moving from shopping lists to solutions. And thinking about conversational commerce, for example, I'm planning a party, I am trying to learn how to DJ. You're looking at these problems and you're looking for solutions rather than searching and scrolling. Walmart's very well positioned in the world of AI. At the same time, investors like money, free cash flow, profitability, and they had over 40 billion of free cash flow and a giant share repurchase too. So you're getting this core value grocery business plus technology, and that's part of the reason why we like this company for many years, and it's our top stock idea as well.
Walmart topping fourth quarter expectations, but offering cautious guidance for the year ahead. Going to send it over to Yahoo Finance executive editor Brian Sozzi, who's got Walmart CFO John David Rainey. Brian.
All right, thanks so much, Julie. John David, good to see you. So right after these numbers hit, I hopped on my X account. I went live, 20-minute analysis. I saw the stock down a little bit, and I'm like, you know what? This was a really darn good quarter. I mean, explain to us, John David, this outlook, because that was the initial focus point of the quarter. It was below consensus. What is everybody missing?
Sure. Well, I'd start with it was a great fourth quarter. We grew the top line almost 5% and grew EPS over 12%. But as we sit here looking out into the next year and basically 1 month into our fiscal year, there's still a lot of uncertainty. And I would very much characterize it the same way the previous guest did. You can point to certain factors, whether it be housing or credit card delinquencies, and you can find whatever metric you want to support your thesis. But at the same time, there's a lot of reason to be constructive on the economy as well. We want to be balanced. If you look back over the last 3 years, each of those years, we've raised our guidance from the year before that. And each of those years, we've outperformed that. That's very much the posture that we want to take right now. But again, given the ongoing trade uncertainty and some of the other news that's out there on the macro environment, I think it's prudent to be balanced right now and not get ahead of ourselves.
Far be it for me to tell the CFO of Walmart, I mean, really anything on numbers. But John David, I mean, the first quarter, I mean, from what you can tell, is your data still suggesting Walmart could outperform its guidance for the first quarter? Is the consumer still strong?
We would always hope to be able to outperform our guidance. One of the things that's we need to take into account in the first quarter is also tax refunds. Tax refunds are projected by some to be as much as 20% higher this year. We're very leveraged to that, both up and down, as we see refunds come in. Not all of that will be spent in the first quarter. Not all of it will be spent. Some of it will be saved. But we have to make certain assumptions about how much of that will be absorbed and spent at Walmart. And so, you know, there is reason to be optimistic. And we are lapping some pretty challenging comps from some of our segments in the prior year. And so that's why we have the guidance that we do in the first quarter. We noted that each of the other 3 quarters of the year, we would expect our guidance to be much more in line with the full year guidance.
You're right. For everything from what I could tell, the tax refund season, this could be a big year. Some folks could get a pretty darn large check. I mean, what does that mean for the business of Walmart? Is this the tax refund season where finally consumers, compared to some prior years, they're more focused on buying that discretionary item? They're out there maybe buying a TV, some apparel that they really didn't need, but this is the year they're going to finally pull the trigger on it?
Well, when we look back over the last quarter, we see a continuation of some of the trends we saw in the prior quarter, where there's still an emphasis on some of the necessities versus the discretionary items, particularly among the lower income cohort. What we're trying to do is provide value and convenience to all of those customers so that they have a reason to come shop at Walmart. We continue to see that we gained share in the past quarter in virtually every category. We would expect that going forward as well. What you're seeing in our most recent results is really where speed meets scale. And that really resonates with customers. We had fully a third of our orders were delivered in under 3 hours in the most recent quarter. And we're now serving 95% of America in less than 3 hours. And so as refunds come in and maybe they're higher than what they were the year before, we're certainly hoping that they'll come to Walmart and buy things at our stores.
The tariff-related inflation, has it been as much of an impact as we initially thought? And are we beyond the worst of that for a retailer like Walmart?
Yeah, certainly if we were talking and having this conversation a year ago, I'd probably have a lot more concern than I do right now. I think in part because of the way that our teams have managed that tariff inflation. We've done a really good job of trying to minimize the impact on consumers and being very thoughtful and choiceful about where we absorb some of those higher price increases versus where we might need to pass that along. If you look at the most recent quarter, like-for-like inflation across the basket of items at Walmart was up only a little bit more than 1%. And so that shows you that we're working hard to try to minimize the impact on our customers and members. And we still have a couple more months to go before we lap that Liberation Day that you said. But it feels to me like we've certainly seen the peak or coming close to seeing the peak of some of the tariff-related cost increases.
Where will consumers start to actually see prices fall? I mean, is that through the produce in the fresh food area, just given how quickly those items turn every day?
Yeah, food is the area right now that I would say is probably most likely to be certainly disinflationary, but maybe even deflationary. When we looked at the 1% like-for-like inflation across the basket of items, the way that breaks down on our business is food inflation was a little bit less than that, and general merchandise was a little bit more than that. One of the key contributors there is egg prices. Egg prices have come down appreciably from where they were a year ago, and you'd be amazed at how much that impacts the overall basket of inflation. So we're continuing to look to see that food prices could come down. And it's really important for us because fresh as an item in produce is something that's a basket driver. We see that when someone's buying fresh in our stores, baskets tend to be about 25% higher. So that level of engagement and that additional level of spend is really important to our bottom line.
John David, I want to show, I don't know if you can see this, but I pulled out a picture from your slide deck, and it was of some fancy-looking robots. And I made a joke out there on X this morning that Walmart is a tech company. You've moved over to the NASDAQ from the New York Stock Exchange for your listing. Walmart's a tech company that also happens to sell eggs, produce, and bananas, and various other food and general merchandise items. What are your big tech investments you are making this year, and how will AI change your business this year?
Yeah, well, I would put AI at the top of the list there. We have our own platform for shopping, which we call Sparky, which you're familiar with. And we've rolled that out in the last quarter, and we've seen a couple really promising results related to that. One is roughly half the app users are engaging with Sparky in some way. And of those users that are shopping with Sparky, we see that their basket size is about 35% higher. And that's because the search results that they're getting are much more contextual, they're more personalized and more relevant to what they're looking for. So we're excited about continuing to roll this out in the coming quarters.
How are you getting items to people's houses faster? Because it's not only a Walmart story. Some of your competitors, I'll just say it. I mean, Amazon's doing the same thing. But how are you doing it at Walmart? I think the speed of delivery has increased dramatically over the past 12 to 18 months.
Yeah, it's a great question, Brian. And I think it's something that a lot of people, when they look at agentic commerce or channel shift or things like that, they probably don't emphasize enough. Being really good end-to-end in retail is exceedingly complex. You take something like fulfillment, knowing where your inventory is and being time definite with when you can give that to a customer or member is really important to that overall process. But what we've done is basically use our stores, our 5,000 stores in the U.S., as distribution nodes for our customers. And so we're able to fulfill from many of these stores to get the items that they want, in many cases, to them in less than 30 minutes. So we continue to see that our speed of delivery is improving. And what we recognize is that when you move from a 2-day promise to a 1-day promise, you see an appreciable increase in conversion. And you see the same type of increase when you go from 1 day to same day.
I know Walmart is all in on its store-level employees. I mean, they are the boots on the ground. But where will AI impact jobs at a company like Walmart over the next few years?
Yeah, we'll continue to look to how we can use AI to be more efficient and, importantly, allow our associates to serve our customers in a better, more efficient way. We've spent a lot of time trying to put this technology in the hands of our associates so that they can spend their time in ways that are more customer-facing or something that matters to associates. I'll give you one example. We have digital shelf labels. You can imagine that in a supercenter where maybe you have 120,000 SKUs and prices are changing constantly, to go physically change those prices is a very cumbersome task. And frankly, it's not something that I think our associates enjoy. By having digital shelf labels, that's now done automatically. It also gives us better fidelity with making sure that the price at the point where the item is picked is the same as what it is at the register. And so that's one way that we can make our associates a lot more efficient and allow them to do the things that really translate into better customer service.
There's been a change in the guard in the leadership ranks at Walmart. How will this next generation of leaders at Walmart look to put their stamp on the business, like a Doug Millen, who recently left?
Yeah. Well, I think I speak for the entirety of Walmart when I say that there's a level of excitement here and enthusiasm about this new leadership team. You can look at each of the individual leaders that are now over these segments, and they have years and in some cases decades of experience leading different departments here at Walmart. So we're really excited about that. But the thing I'd say about John, and if you listen to the call this morning, it really was clear. John has his fingerprints over the strategy that we've been implementing over the last 5 years. He has really leaned into not only the digital channels, but a lot of the efforts that we have in AI. And so we're excited to stand behind him and see what happens over the next several years.